If you're a business owner and you've ever wondered, are there ways to save tax? This video is for you. Enjoy. Today we're in lovely Seattle. No, not Seattle as in Washington, but Seattle as in the best coffee shop in Kimberley. Today I'm joined by Hendrik Wessels. Hendrik is a chartered accountant and has over 17 years of experience. He was a director at PwC for the last 4 years before opening up his own practice. He's now the managing partner of Bookkeepers Online. He's an expert when it comes to tax and an absolute genius when it comes to structuring your business for tax. So without any further ado, welcome Hendrik.
Thanks, Kobus. It's an honor to be here.
I've been looking forward to do this video with you for some time now.
Yeah, it's been overdue.
We have many business owners as our clients, and I think what I've noticed is that many of them don't know that there's actually so many ways that you can actually save tax legally. I've also seen so many people not focusing on the structure of the business, and I think what I mean by the structure is whether they do business in their own name compared to a company. But that's a different topic. So in today's video, we take a look at companies, but more focused on the small business benefit for tax purposes. But before we get to the small business side, many businesses currently operate within a company. And I think for those who don't know, how does tax work in a normal company compared to, let's say, your own personal capacity?
In a company, from the first rand that you earn, you pay 28% tax at a fixed rate. Whereas in your personal capacity, you pay tax based on a scale, which starts from 18% and go up to 45% if your income exceeds 1.5 million. One needs to consider or need to take into consideration that the 28% is not the only tax that you pay. Should you want to distribute profit to yourself, there's additional 20% dividends tax that one needs to pay to be able to have the money in your own hands.
There's something called a small business corporation. What is it and what's the benefit of being one?
A small business corporation is basically a company or a CC where you have to adhere to certain requirements. If you then adhere to these certain requirements, it basically you get taxed on a scale that starts from the first 83,100 being tax-free, and then you start paying tax at 7%, and it goes up only to 28% when your profit is more than 550,000 rand for that specific year. Then furthermore, you also have the benefit of having a quicker write-off period, basically more or less the same write-off period that you would have in a farming company or a farmer, which is 50% in the first year of the cost price, 30% in the second year, and 20% in the last year.
Which is obviously not the case if you're a normal company.
Yeah, which you don't get that deduction if you're a normally company. Only a farming company would qualify, but if you're a small business corporation, you actually qualify for the 50, 30, 20% write-off. Furthermore, you also, if you're in manufacturing, you get 100% deduction in the first year of acquiring a capital asset.
I've taken a look at the tax tables, and correct me if I'm wrong, but only on the tax tables alone, you could save potentially about 95,000 Rand a year compared to a normal company.
100%. So it really has a big benefit from the tax table. But then if you take the write-off period or a write-off percentage that you can use, you can actually save much more than that.
Yeah, it's not something you should miss.
No, you should take the opportunity if you can and make sure that you use it to your benefit.
So on that point, who qualifies as a small business corporation, and do you need to register as one?
Okay, there's no registration requirements to actually be a small business corporation. The most important element is you have to adhere to certain requirements, of which the major I will mention to you now is that your turnover must be less than 20 million per annum. You need to be, the company's shareholding needs to be held by a natural person, and that natural person...
Sorry, Hendrik, when you speak about a natural person, what do you mean by natural person?
That would be a person, an individual that basically has an ID number, because a trust wouldn't qualify as a natural person. Furthermore, the additional requirements that individual should not have shares in any other private company or public company that is not traded on the JSE Stock Exchange. Which means if you're owning shares at a specific co-op like GBK or FK, you are disqualified because those shares are deemed to be shares in a private company which is not publicly traded.
I think that's an important point that you mentioned there. What I've seen in practice is a lot of business owners tend to have a lot of entities on the side. I think they might want to open up another side of the business or something like that. But then they are in actual fact an owner or shareholder in another company. And by that fact alone, they're disqualified as a small business corporation.
Yes. And the important thing is the natural person is the person that's not supposed to have the shares, which means you could have a family trust which owns the shares in your other companies. And then you would still qualify in that specific entity where you own the shares in your own name as a small business corporation. The other requirement which one needs to look at, which is also important, that if you're a personal service company, or you a farmer, or you're an accountant, attorney, etc., there's a lot of them listed specifically in the Act, you can only qualify if you appoint more than 3 employees that is not related to you and the company.
So what do you mean about related?
Which means it's someone that's either a family member, or close to you, or a relative to you or to the family, and it's someone that has some other interest in your business.
Okay, so if you're a personal service provider, let's say you're an accountant, for example, there is a workaround. You have to just employ 3 unrelated employees.
Then you could still qualify, as long as your turnover is less than 20 million. You don't have shares in another company, and all the shares is held by a person that is a natural person. Another requirement which one should not forget is the fact that specifically in section 12 capital E, it specifies that your company or the small business corporation should not have investment income of more than 20% of the total income. So it's important to take note of that requirement. So if you have investment income that constitutes more than 20% of your total income, you're actually disqualified of being a small business corporation.
And what do you mean investment income? What does that consist of?
Okay, investment income is any rental income received from properties.
So in other words, if you're a property, if it's a company that's predominantly renting property, you're disqualified.
Yes. So the important qualification criteria is that your turnover should be less than 20 million per annum. The shareholders of the company needs to be natural persons. These natural persons may not have any shares in any other private or public company that is not traded on the JSE. You may not earn investment income more than 20% of your total income. And then if you're a personal service company, you're not allowed to, or you must appoint at least 3 employees to be able to still qualify, and these employees may not be related to you or to the company. Then if one has to summarize the benefit that you have, you then tax on the tax table, which gives you beneficial rates from 0 profit up until 550,000 Rand profit, which means you pay a lower tax. If you're based on that tables, you actually have a saving of plus minus 95,000. And then you have the accelerated write-off for your direct company assets or capital assets that you purchase, which is a 50, 30, 20% write-off. So 50% in year 1, 30% in year 2, and 20% in year 3. And then if you're in a manufacturing company, you get 100% write-off. So this is basically a summary of everything that you need to know when it comes to small business corporations.
I think the important thing here is that each individual situation will be different. And although there certainly are ways that you can save tax, I do advise that you speak to a chartered accountant to set up the structure of your business. And that's a wrap. If you need more information, contact details will be listed in the description below. Until next time, bye-bye.
Thank you!